What's up, people? Again here, it's your boy Francis Kamau, FK Dollar, and I've been trading for the past 2 years now. And in today's video, I would like to present to you on how you can get started trading in 2026. So, without wasting much of your time, let's dive into the video. Today I want to talk more about how you can start trading as a beginner. So, complete trading guide for beginners in 2026. Yeah, Young Forex Traders Academy. I guess this is the biggest trading platform or trading academy in East Africa and in Kenya. So, the first thing is to understand why start trading. Why are you starting trading? Why are you starting trading? Yeah, this is the first question that you are supposed to ask yourself. And I have elaborated and said that there is no competition in trading. It's between you and you. Then other reasons that I have not presented to you here are like you want to make money, you need financial freedom. That's why most of us and most of the traders come into trading, and I hope that's why you are watching this. You want to become financial free. Then the next one is, what is forex trading? Again, in all businesses, in all model of businesses that you come across in this world, you need to know where and what is the purpose, or where they come from. For example, what is forex trading? In our case here, this is the exchange of currencies. This, I don't know how I can explain it better, but what I understand is that is the exchange of currencies, actually foreign currencies. Yeah, it's the exchange of foreign currencies, whereby you have a dollar and you have a shilling. You want a dollar from the shilling, so you are going to go and present yourself with a shilling and then get the dollar in return. So that's what forex trading is all about. Then, for example, I am buying a shilling and selling at the same time. So in forex trading, this is the same model of business that works with the forex bureaus, but this time around it is in your phone, it's in your computer, it's in your laptop. And since the world is moving high, every business have got how it's running in today's era or in today's generation, whereby you don't need to set up a forex bureau for you to start trading. What you need is a phone, a laptop, and a good network. Yeah, that's what you need. For example, to get to buy a shilling or sell. So when you go to a forex bureau, you're going to get a quotation or exchange of currencies. For example, they will tell you that they are buying dollar at this rate and selling at this rate. We are buying the pound at this rate and selling at this rate. The next one is examples of currencies. You need to know what you are working with. In every business model, even though it's a physical job, you need to know what you are working with. So in our case here, we have major currencies and we have minor currencies. The major currencies, these are currencies that they have attached with the dollar. I have not written that statement, but these are currencies that are attached to the dollar. For example, you have Euro USD, USD GPY, AUD USD, GBP USD. Then minor currencies, these are currencies that they don't include the dollar. For example, GBP GPY, AUD GPY, Euro CAD, and New Zealand GPY. Not South African and GPY. Then we have exotic currencies. Exotic currencies, these are the least traded currencies. Most traders don't trade this, so these are the least traded currencies, and I would not recommend for you to trade this because you will get, like, you are going to hold for a long time before you get into profit. And example is GBP and South African rand, USD and Zirand code, USD and Kenyan shillings, and USD and Ugandan shilling. Next, it's a trading platform. Again, when you are starting trading, you need platform whereby you need to know where you are going to get your buys, where you're going to get sales, where you're going to get buyers and sellers. So you need platforms for you to trade. And one of the examples of the platform that you need is TradingView. Yeah, you need TradingView. This is a site where, or a platform where most traders do their analysis. So you get to the TradingView. For example, I don't know whether I can get into my TradingView for you. Yeah, example is like this one. These are an example of TradingView, and this is how it looks like. Where we have the watch list, where you have what you trade. For example, I have gold, I have GBP GPY, I have GBP USD, and I have USD GPY. Yeah, and I will make a video of how to use this platform. Yeah, that is how it looks like. Let me get back into our presentation. Yeah, so you need TradingView, then you need MetaTrader 5 or MetaTrader 4. Again, for you to trade, you need this platform. Why? This platform is where most traders execute their trades, and also they use to link their brokers using for easy trades, opening and closing of trades. So these are platform whereby you install it in your Android phone or your Apple phone, your iPhone. This, you can link your broker with this platform. Yeah, I'll get to show you on how you can do it. You just install using your phone. So I will show you in a short while. Then you need Forex Factory. For your news, you need this, because every morning before you place a trade, you need to know what is the market running. Are there news? Do we have CPI? Do we have NFP? Do we have any other form of news? For example, for me, I use Forex Factory. So, and I guess I should show you again on this. Let me show you. Yeah, it's good. So Forex Factory. So this is the site where you check where you have news. For example, today we have news. Today is on a Monday, so we had news, not high impact news, but we had news affecting GPY, USD. Yeah, these are not high economic events that can affect market in a strong way, unlike NFP, CPI. Yeah, those affect market in a high way. So that is it in the Forex Factory. So this is a platform where you check the update of news that are happening and how they affect the market. Yeah, and how they affect the market. So you're going to check your Forex Factory. So in here we do have a different platform or different sites that people do check their news. We have Forex Factory, we also have investing.com, and also we have Fastballs. Again, Fastball, you can use it for your analysis. Yeah, I've been using it for the past 6 months. Yeah, and maybe I can show you how it looks like, the Fastball. Let me show you how it looks like. Yeah, let me show you Fastball. Let me show you how it looks like. Yeah, let me show you how it looks like. Yeah, my network is a bit slow, but don't mind. So you are going to log in using your details here. Yeah, I'm going to use my details, but this is when you don't have an account. So since I have the account here in this channel, so I'm not going to log in. And so those are the things that people do consider. Again, what you want to consider as I continue with this presentation is the broker. In every business that you are going to come across in this world, we do have brokers. For example, we have car dealers. If I want a car, I can't just go to Japan and get the car. So I need an intermediate whom I'm going to trust to get it for me. Again, in the market, the food production, we do have brokers in that sector. So again, in trading, we also have brokers. And these are the things to choose when you want to get the best broker to trade with. So the broker that you are going to trade with must be regulated. And what do you mean by this? The broker that you are going to be used must be legitimate. You don't want to trust somebody with your cash. Remember, here you are going to do your deposit, you are going to do your withdrawals, and this is how. So you need a regulated broker. And if you can see, I've underlined with the purple color, you must. So it is a must for you to get a legit broker, for you to start trading. Again, you need platforms to trade. So as I told you, we have different trading platforms like MT5 and MT4. So the broker that you are choosing to trade with must be able to help you access to MT5 or MT4, where you are going to be executing your trades. Then how fast is their deposit and their withdrawals? Do they have local payments? So these are the things that again you need to check. Do these brokers, how do you deposit? How fast is the deposit? How fast is the withdrawal? Then when it comes to the withdrawal, which payment are they using? For example, the local payments, for example, in Kenya we do have M-Pesa. You can use crypto, you can use any other paying platform, PayPal, whatever, your wallet, all those are paying platforms. Do this broker that you are choosing, on which basis or how does he offer his payment? For example, the broker that I'm using, HFM, I'm able to withdraw using my local payment, that's M-Pesa, Safaricom. Do they have tighter spreads or even lower commission? Again, brokers, they do make money through spreads and commissions. Again, when you are choosing a broker, you don't want to choose a broker who have large spreads or huge spreads, and that affects you as a trader. You want a broker who have tight spreads for you to, when you execute a trade, you are able to make money. Then commissions, because again, this is another way where brokers do make their money. Whether you open a trade, you win or you lose, the broker still makes money. So how low is the commission? How low is the commission? Then the last one, accessibility. Are you able to access your broker? How can you reach them in case of anything like your slow withdrawal or anything concerning your account? How accessible is the broker? So these are the things that you want to consider before choosing a broker as a beginner. Now that you have reached to this point in this video, consider smashing the subscribe button. The goal is 1000 subscribers. And also don't forget to comment and also share on this video. So let's get back to the video now. Then market structure. Now you have the platforms, you have the broker, and you know what you are trading. You have the currencies that you want to trade. Now you want to understand the market structure. In every business, in any company that you come across, there is a structure whereby you have the CEO, you have the clerk, you have all that hierarchy. Again, in trading, we do have market structures. The market moves in three phases, or in three ways. We do have the uptrend, whereby the market is forming higher highs and higher lows. It's moving to the upside. This is where the buyers are in control, and they control the market in the bullish side. So in here you are looking for buys. For example, let me take you to the charts. Just a minute. Let me take you to the charts and show you something interesting here. So again, okay, here's a trade that you took in the morning. So let me go to the H4, to the higher time frame. Let me go to the higher time frame. Or even let me go to the daily time frame and show you something. For example, I'm looking for a bullish structure. In here we have a good bullish structure here. Here we have a good bullish structure here to the upside. So this is what I was saying about the uptrend, yeah, whereby the market is forming higher high, higher low. Let me elaborate it further. Let me use this tool. So the market simply moves to form this let me leave it here. I can't use that one, but let me use this. Yeah, higher high, then comes back for a pullback to form a higher low, then forms a new high, comes back to form a low, then goes up to form a new high, and now expecting a pullback, either to proceed and break this level. So I had done this level, but when the market reached here, it forms a great bearish, yeah, or even proceed to the downside, yeah. So that's basically what bullish can, or that's what bullish means in our case here. This is what I was presenting to you. Then we do have a downtrend. This is the formation whereby the sellers are in control. The sellers are controlling the market. For example, let me show you again in here. This is a good sign of a downtrend, whereby the market is forming lower high, then forming a new lower, going back to retrace, then forming a new lower, then getting back for a pullback, then forming even a new lower. But again, it reaches a point where the market now reverses to the uptrend. So this is the sellers are in control in this market structure, yeah. And to know all these, you need higher time frame, as I will tell you later in the presentation. Let's get back to it. Then we do have ringing or consolidating market. This is where there is a fight between the buyers and the sellers. There is no good decision that has been made by both buyers and sellers. So in here you can't trade. Actually, when you open your chart and see this kind of formation, yeah, it's not advisable for you to trade. let me get back to the chart and show you how, whether I can get that. Let me go to the first time frame and see whether I can get a good picture, a good presentation of a ringing market. Guess here we do have a good one. Here we do have a good one. Let me draw it for you from here to here. Then another one here. Let me start it from here, coming all to this side. So this is a good example of ranging market, yeah, but I guess this is not a very good one, but it will resemble what I want. It will be able to present what I want. So simply the market is moving like this, coming back, going up, not breaking any of these levels, but it eventually broke, but the buyers were not strong enough and it happened to come to touch this point, then comes in, it fails to break in here, it fails to break in here, yeah. But if you can see here, the market was able to come and break here. It was able to come and break here, and then came back for a retest, and then continued with the buys. So this is a good structure of showing consolidating market, yeah, consolidating market around this place. So that is it on that point. Let's get back to our presentation. Then the other thing to consider in when you are starting trading, now you have known how to, on which platform to use while trading. You know the market structure, you have a broker. Now the next thing is trading strategy. You need to know how you are going to trade. You need a good strategy, a profitable strategy that will make money, that will make you money consistently. And in my case here, I have said that this is a simple approach to the market. You need to know how you approach the market. Don't just bump into a chart and come up with funny things. For example, I personally use demand and supply, whereby if the price in the demand zone, I'm looking for buys, and even in the supply zone, I'm looking for sales. Then analyze using top to down analysis. Again, this helps me to get more accuracy setups, because higher time frame resembles on the structure of the market. If the market is to the uptrend, I'm able to get down and look for buys. If the market is to the bearish or the selling side, I'm able to go and get bet sales, yeah. And I have bolded this. I use high time frame going down to smaller time frame for executions, yeah. Now you know the strategy. Next is capital. You need to know how much you want, or what's the capital, yeah. This is the amount that a trader needs to start with it in order to make profit. So in trading, in all businesses modules that you come across, you need capital. There's no business that doesn't have capitals. And trading, I guess it's the cheapest starting business, because you can start with less than $5. Yeah, you can start with $5. You can start with $10, $1,000. the amount that you want to start with. Yeah, it's up to you. Now that you have reached to this point in this video, consider smashing the subscribe button. The goal is 1000 subscribers. And also don't forget to comment and also share on this video. So let's get back to the video. From there, you have the capital, you have the market, you have the strategy. Now it's risk management. In trading, you need to manage your risk, because again, you are not here to gamble around. You are not here to try and see whether it's going to work or not. You are here to ensure that this is part of my income. So trading without risk management is gambling. Yeah, if you are not using risk management, you are not managing your risk, you are simply gambling. And risk management is one of the things that rules away trading from gambling. What to consider when it comes to risk management? The road size. The bigger road size, high risk, and small road size, small risk. What do we mean by this? For example, you have a capital of $100 and you open a trade with a lot size of 0.01, and another person with the same capital but opens with a higher lot size. You are going to have differences, whereby if the trade goes against you, for the person who have used 0.01, the loss will be smaller, but the person who have used a big lot size, the loss will be huge. And this can lead to account borrowing. You can borrow your account easily. Then the other side, if you use 0.01 and make a profit, it will be different from a person who have opened with a different lot size. So lot size is among the things that you need to consider when you are starting trading, and before you open up a trade, you need to calculate the lot size that you try to use. Then number of trades. This can affect your trading style. When I was starting, I was opening like 5 trades at a go, and even the market have not moved even 5 pips. I have a margin call. Now the broker wanted me to deposit more money. So you can take one trade and make you money. You can also take that one trade and not make money. But this lures you away from that high risk of making losses. And again, you need to minimize your trades. For example, in my side, nowadays I do take a minimum of 2 trades or even 3 trades. That's enough, depending on the currency that I'm trading. Yeah, 1 trade is enough. 2, maximum of 3. Yeah, that's enough. Risk to reward ratio. This is now what risk management is all about. For each trade you take, there is a reward attached to it. For example, you are risking 1 to make 2 or 3. For example, you have $100. You are risking $1 to make 2 or 3. This means it's called 1, 2, 3 RR. This RR means risk and reward. What does this mean? What you risk must be small than what you make. In every business, the risk needs to be minimal, but the reward needs to be bigger. The same case appears into trading. For example, you are risking $50 in an account. Consider making $100 or $150 in that account. Just in case you have taken 10 trades and your strategy is 50-50 win rate, you take 10 trades, you win 5 and you lose 5. You will still end up profitable. Why? Because whatever you made is bigger than whatever you risk. Rather than having a 80% strategy win rate, whereby you are taking 10 trades. When you win 8 trades, 2 trades kick you off and you are cooked and you end up blowing the account. Yeah, so ensure whatever you are making is big than what you are losing. Next thing, use stop loss and take profits. Again, this is unavoidable circumstances. Remember, trading is a high risk business, and trading you need to use stop losses and take profits, whereby this will help you cross off losses and profits automatically. So the broker will see that you have put a certain stop loss, and the broker will close that trade if he is in the downside or hits your stop loss. Again, he will close the trade if it hits the take profit. This will help you to control your emotions. When you have set your stop loss and your take profit, this will help you not to get that emotions. The emotions will be controlled. The next thing is trading psychology. Trading psychology plays the big part. Actually, it carries 60% of your whole trading cycle. This is the emotion and mental state that influences a trader to decision-making process in the financial market. Examples: there are trading emotions that affect a trader. Revenge trading. So revenge trading, these are points where you have taken a trade and the trade hits your stop loss. You go back again, then trade, hit a stop loss, then go again, hit a stop loss. By the end of the day, you blow the account and you are cooked and you are gone. Now, stop revenge trading. Now that you have learned all those, and now I'm in the last part of how you can get started into trading this year. Avoid revenge trading. The markets are open today, they will be open tomorrow, they will be open the next day for 5 days. So if today you make a loss, tomorrow you will make a profit, because today maybe we had news, we had, okay, the market wasn't for you today. Then another emotion that affects most traders, the 90% traders, is fear. Into brackets, you have trade FOMO, the fear of missing out. You have entered in your chart, a trade is moving without you. The worst mistake that you can ever do in trading is chasing that trade. To be a better trader, wait for a pullback, then execute the trade. That's for you. Food for thought. Then greed. This is again another thing that holds most of the traders back. Greed, whereby you have made money but you want to make more. For example, you have made $10 in a certain account, then you end up, you want to make 20. Guess what? You are cooked. The account is gone. A stop loss is hit. You end up revenge trading, whereby you had made money but now you wanted to make more, but at the end of the day you lose it all. Then overtrading. This is the last thing, overtrading. Overtrading is whereby you are in the charts from morning to evening, from morning to midnight. You are still in the chart doing what? If you can't find a trade, get off, close up the laptop, close up your phone, leave and go do other things. But to avoid overtrading, because overtrading will lead you to make decisions which are not good and will make you overtrade, to make you greed. So avoid overtrading. Lastly but not least, these are charts that I've made whereby your trading strategy is 20% and your capital is 20%. Trading psychology is 60%. Work on your trading psychology, then the rest will follow. So by this point, thank you for watching this. By the end of this, so whatever I can say is that consider smashing the subscribe button, and also don't forget to like and share. Yeah.